Let me know if everyone can see the slide. You should see the Empire State Building and the stock swoosh logo. If you want to chat, you go down to 2 individual user and you can type in there. Can everyone see that? Where you chat? I see some familiar faces. I see some new faces. James, you signed up for today, and then I also saw you unsubscribe, so I think you did that by mistake. So I'm going to send you a link to resubscribe, James. I think you made a boo-boo doing that, because I saw you signed up for the webinar, but then you unsubscribed. So I will email you that when we're done to get back on the list. Can everybody see the slide? We're starting a few minutes late here, but we're going to get going. And again, my allergies are bothering me, so forgive me. My nose is stuffed up. The pollen is really bad here right now for some reason in New York, so if I sound stuffy, sorry about that. Not much I can do about it. So welcome. Welcome, everyone. We're going to get started. Today we're going to talk about making money trading momentum, which of course is what I do. For those of you that don't know what I do, my name is Melissa Armo. I own my own company called the Stock Swoosh, and I've been trading now for 16 years. It's actually going on 17 years. 2025 will be 17 years that I'm trading. That's crazy. I also appear on TV. I was on Fox a week ago. Actually, Memorial Day was only a week ago. Hard to believe. It was a short week last week for the market. And now here we are back at it this week and seeing where we're going to go. If you have questions, you can email me at melissa@thestockswoosh.com. I have a class where I teach my method, which I'll talk about at the end. You can email me at melissa@thestockswoosh.com if you have questions or if you would like to sign up for the upcoming class. You can also call me as well. So let's talk about trading. You know, a lot of people trade for different reasons. Some people I'd say it's a mix. Some people are trading because they want to do this full time, or they're retired and they have time to trade. Some people are trading and they want to actually do it as a full-time career, but they have to make money trading, learn what to do before they can transition. And that's a process. I get this question all the time. How long does it take to do it? You have to set goals for yourself if you want to be financially independent. I'd love to say everything happens like that, but again, it's a process where you need a plan of action to achieve those goals. Say, for example, you say, I want to make $2,000 a week or $3,000 a week. You say, well, how am I going to get to that point? So you set the monetary goals, but then you also need a way to achieve those goals. You need a plan of action. And so many people, when they're trading, don't have a plan of action. They also really don't have any specific financial goals. And I think part of that is important too. Again, if you're looking at risking $1,000 a trade, you want to make what? $1,000 a trade. So again, you have to take into account the size of the cash that you have to trade, the size of your overall account. You have to look at that. You have to look at how much time you're going to spend trading a week. Can you trade 5 days a week? Maybe you can only trade 2. All of these things you have to take into consideration when you're trying to make a plan for yourself. So I have in here the results. Let me just move this. For some reason, this is there. I have in there here the results. So far, this was through the day before Memorial Day. I took the week off last week. Closed the room, so there were no trades last week. But so far through the end of this year, which would be May 31st, stats for the year are 468,247. And again, this is through Friday of last week. Last week I closed the room. So if you're interested in day trading, I specifically call the trades live in the room, the entry, the stop, and the exit. If you're interested in doing options, I have an options newsletter too. The options newsletter, I'm risking more. This I have to update through last week as well. But my stats for my options, I'm making more money on my options because I'm risking more, okay? So again, whether you want to do day trades or whether you want to do options or whether you want to do both really has to do with the time that you have to spend trading. Again, whether you're familiar with doing options or buying calls and selling them, buying puts and selling them, or if you want to do day trades, which are on margin, okay? And any questions, plop it in the room as we go along. So anyway, summer is a great time to trade gaps. It's a great time to trade gaps. Why? Because specifically what I do is looking at the morning time frame where trades happen fast and quick, okay? So I'm really, really interested in getting in and out of trades as fast as I can. That's the most important thing for me, specifically when I'm day trading. And in the summer, you tend to hear the summer doldrums where the market kind of drifts off and doesn't go anywhere in the afternoon. So for me, always, all year round, I'm interested in getting out of the fast trades. But really in the summer, I don't want to sit at my desk for 6.5 hours. So it's really nice to be able to get in and out of trades so quickly when I'm doing trades, especially in the summer when the weather is nice. And I always say to people, work smarter, not harder. You're looking to trade and you're looking to make as much money as you possibly can as fast as you can make it. You know, once you're out of the trade, the money's yours. Until that point, you could be up in a trade and everything could look great. And until you exit it, until you get out, you don't have the money booked. So holding forever and ever and ever and ever is not what I do, okay? Specifically, I'm looking to get in and out as fast as I can. Then you're not at the mercy of other things, economic data, earnings, anything else could affect your trades and your overall profit that you're in a trade, even if you're in something and you're up. And again, any questions here, you can plop them in the room as we're going along. So do you want to make money in the market? If you do, you have to learn how to do it. Do you want to trade the market, but you don't have a lot of time to devote to trading every day? If you don't, then again, my system may work for you because I don't spend a lot of time trading each day. Do you want to do something to have more money coming in each month? Again, you may love what you do for a living. When I changed careers, I didn't like doing mortgages. I wanted to change careers. So that's how I got involved with day trading. But again, if you like what you do, that's fine. You can make extra money trading. And you don't have to do it where you're sitting in front of a computer for 6.5 hours a day. You can do it where you're in and out very, very quickly. And again, do you want to find a way to pick which stock to trade that will move, have a big move on the day to pay you, okay? So again, on any given day, every stock moves, but some only move a little bit. They don't have what I would call a big move or a momentum move, okay? So you want to have that big, big move, that large move when you're trading, okay? Then you can make the most money possible, again, in the fastest amount of time possible. And that's important for day trades and options. And again, do you want to trade the market, but you don't know where to start? And this is a lot of people. A lot of people want to trade. They want to make money. They don't know what to do. That's why people are going to these blind Reddit chat rooms and taking some of these trades where they're following strangers and they don't know what to do. And of course, you're seeing how that's working out for people. People are losing money doing that. It's really not a good idea to trade where you're taking ideas from strangers. People that come and take my class and learn from me, they get to know me. They're getting to know me in the 16-hour class. They get to know me in the live trading room. And again, they're seeing and hearing me talk every single solitary day. And that helps people get to know me as well, where they can have the confidence and conviction in what I'm saying, whether it's about the stock or the gap we're trading or the overall market. Jim, I just saw you come in late. We've already started. But if you have questions, you can plop it in the room. Can everybody hear me? See what page we're on here? Okay, so let's get back to what I was saying. Find a strategy specifically, okay, that meets your needs. For me, my strategy on gaps meets my needs because it sets up fast, it sets up quick, it sets up early in the morning, and it has a big move. Okay, so these are all the reasons why I like to do gaps. So again, what is a gap? A gap is the difference between the close and the open. Stocks gap most every single day. Not every gap is what I call a good gap or what I call a golden gap. I'm looking for gaps that are predictable. How do I do that? I use my gap rating system. So again, what is a gap? This is a daily chart of Microsoft. So what is a gap? A gap is the difference between the close and the open. Microsoft closed up here. This is one of the days up here. It closed around 429 and change. Gap down here in the morning and opened around 424 and change. Open, fell. Okay? So again, what is a gap? A gap is the difference between the close and the open. So this closed here at one price and opened at a different price the next day. And then, of course, it sold off. So there are bullish gaps and there are bearish gaps, but I specifically like to focus on bearish gaps. So again, on this particular day, what would you have done with Microsoft to make money? You would have wanted to short it, okay? And again, we were talking about momentum. We were talking about big moves. This had a big move. This was a $10 bar, okay? A push. Here was another one we did. This was Disney. This was way back May 7th. We did the Disney here. Stock closed here, gap down, open, dropped, okay? I called the 102 puts in Disney, and I called this out for a while. I called this out for 2 weeks, which is rare. But anyways, it fell on this day here, which is 515. The stock came all the way down, broke the strike, which we did the 102s, came all the way down to 101 and change. You see that right in here. Broke 101 even. So again, this trade I did here, and then it fell here. So again, we did the Disney 102 puts that expired the 17th. I sent them out on the 7th. This was really, really cheap. Why? At the time that we did this trade, it was so far away from the strike that I called it that it was pennies in the dollar to do it. So it was a huge trade, 150% return on investment. And again, we were in it so early. So I want to go back here. So I called the 102 strike here. The stock opened on this day around 107 something, 106 and change. So again, I saw that the stock would fall where it did, like 2 weeks before it did. How did I know that? Because I rated the gap. Okay, I rated the gap. I looked at it. I determined that it was going to fall and that it was going to break and it was going to go to this target, this target, this target, this target. Again, all of this I teach in the class. We were talking about this earlier today in the day trade room, and someone said, let's go over targets. And I said, to so-and-so, it was David who asked the question. I said, David, I know David understands targets. It's the timing of the targets. Do I wish that Disney would have gone to 102 the day that I called it? Sure. Sure, I wished it would have. I wished everything would go to the dream target or the piggy target the day that I call it. That doesn't always turn out that way. That's why understanding what to do and having a set strategy really, really helps you trade, do well, and then get the move right. Because again, if you're looking to do something and you want to get into it and you want to profit from it, you want to give the trade a chance to work, but sometimes things don't go the same day. Again, usually I'm doing the weekly options, but I might do something out 2 weeks or a little bit more than a week, which I did. It wasn't a full 2 weeks here, but I did it out almost 2 weeks from that date. So again, the whole point of trading gaps and why I do is they have great risk to reward payouts. Most people who trade the market, again, are looking to what I call scalp, where they risk $1 trying to make 10 cents or 15 cents or 20 cents. I'm up money many times in trades that little bit and I don't get out. When I say a move, I mean 50%, excuse me, 50%, 75%, 100%. That's what I consider a move in something, okay? That's what I consider trying to get what I call a push. And again, when we're short or doing a put, we're looking to get a sell-off. What's another reason to trade gaps that I do? Big profits, okay? Again, that Disney was a huge trade. 150% return on investment is a big trade. Again, we've done many, many trades in Disney. Some were day trades, some were puts, but they were all big trades where we had big profits. And again, what's another reason to trade gaps? Fast, quick, hurry, hurry, hurry. Again, to do a trade one day and get out the same day is fast. Sometimes that's in day trades and options. Sometimes it's just in the day trades. Sometimes I'm in a day trade and I'm in and out of it in 2 minutes, 5 minutes, 10 minutes. That's fast to me. That's quick to me, okay? But again, whenever I'm looking to do something, I'm trying to get the biggest move I can. I may not get out at the low of the day always in a short. I'm trying to squeeze as much as I can out of it, as quick as I can. Again, in the morning drop. We're talking about the morning. The morning is a critical time. And again, another reason to trade gaps is it helps you really focus on one thing where you don't need the market. Again, so many times people are looking, what's the market going to do today? Is it going to rally? Is it going to drop? Market gapped up today. First it rallied, then it fell. If you needed the market today for your trades, you were all over the place. Very difficult to do. Market didn't make any sense today. We're still in a range. If on any given day you need the market, you better get the market right the way that you trade it. And that's very difficult for people to do. And the market some days goes nowhere or doesn't even make any sense. So you need to find selective things to make it easier for you to trade where you don't need the market. You don't need the market's help, I should say. What's another reason to trade gaps? They're very effective and efficient. And again, part of the efficiency is the speed, but it's also the momentum like we were talking about, where you're trying to get to the place that you want to be as fast as you can get there, as efficient as possible. It's like if you wanted to go to Florida, I live in New York, it's a heck of a lot more efficient and effective to get in an airplane. And you could get in an airplane in LaGuardia and you could be in Florida in 2.5 hours. If you want to drive to Florida, it's going to take you 12 hours. That doesn't even include traffic. So again, what's the most efficient and effective way to trade? If you want to make $1,000, well, you can risk XYZ amount of money and you could wait 6.5 hours for the trade to go, or maybe you could wait a month for the trade to go if you're in a swing trade, or you try to make $1,000 as quick as you can in 5 minutes, 10 minutes, 15 minutes. You'd rather make the money in 5 minutes, 10 minutes, 15 minutes. And again, then you don't have to worry about things affecting the overall trade, okay? So what's another reason to trade gaps? Again, the moves happen fast so you can enjoy your day and get on with it. Like we were talking about, the fact that it's summer trading. So this was the week before the holiday. Again, I closed the room last week. So the week before the holiday, we had 100% winners. This is all the stats for the week. We're going to go over all the trades. This is a week of 520. Again, the market was closed on Memorial Day, and I closed the room last week. So it was $11,000 profit with an average risk of $3,000 per trade, because that's what I'm risking on my day trade. So this was the Monday of the week, the last full week we traded. We did Google, and again, this was 520. So again, we actually went long Google here. Just want to show it to you. This is a daily chart. Again, I usually short, but we actually went long on this day. It was the only thing I really liked this day. Stock closed here, gapped up, rallied, and we went long. The entry was 177.60, exit was 178.40, profit was 3,200. You could risk half this, you could risk less, you could risk a fourth of what I risked here. You need a day traded account, a margin account, in order to do these trades. But if you have a margin account, you can get in the room. You can take the trades with me in the room. So we did Google on the Monday. Then we did AMD, which was 521. Crazy as it looks, we made money in this. Stock closed here, gap down. We actually shorted AMD on the 21st of May, even though it's a little baby bar. We actually entered at 164, exited at 163.30, and I made $17.50 here in this. It was a 70-cent move. We got in, got out quick. Again, fast. Stock gap down. We did it, and we were in and out. Boom. Took a little bit longer for this one to go here to really fall. It took a couple of days, but this was a day trade here. Again, we got in and out quick. The fact that you could even look at something like that and say, how could you make almost $2,000 in that? Again, it's the entry. It's the seeing it. It's seeing the gap and seeing that it's going to have a move to the downside, which we did. Then we did Target. This was even crazier. I don't have the 1 minute in here, but we actually made money shorting Target on the 22nd, which is even crazy because of the fact that it was green on the day when it closed. But we got the rally, then we shorted it, then we got the drop, and we got in and got out. Entry was 142.40, exit was 141.15. Pulled $1 plus out of it, out. Again, get the move, get out. Get the move, get out. Boom, done. Profit was 31.25. Again, this was earnings, specifically on this day that we did the Target. The stock closed up here, It was around 156 and change. Gap down here in the morning around 140 and change. The stock initially opened, rallied. We shorted it in a 1-minute chart. Got in, got out. Boom, done. Again, it doesn't matter what you're doing. And I'm not talking about NVIDIA or something. But on most given days, you want to do a trade where you're looking to get $1. $1 is a good move. You short a stock, it drops $1. You have 2,000 shares. You're going to make $2,000. You short a stock, it drops $1. You have 4,000 shares. You're going to make what? $4,000. And we made more than $1 in this. Okay. So again, it's the idea of plopping on the size, getting the entry, getting the exit, but you got to have the pick. You got to know what it's going to do, where it's going. And then we did Disney on the 23rd. Oh yeah, here it was this day. We're just talking about this in the room here. So we did Disney here. It was stock closed here, open, dropped, fell. And again, this was Disney. And this was a nice one here, actually. So again, Disney, we entered 102.65, 102.60. Exit was 102.15. Profit was 29.25. Again, this was something we've been watching and watching and watching. Like I said earlier, we've done puts in Disney. We've done day trades in Disney. Disney fell today. Could have shorted Disney today. Anyways, this was on the 23rd. This was the Thursday before that last week. So again, how do you put a week together? This is actually the 24th. Sorry, not the 4th. No trades because I was closed on the Friday. But again, you hit it once and out, in and out, in and out, and you're done. And that's how you put a week together. The whole idea of day trading is not to hold it forever and ever and ever. Same thing with doing options. It's not the idea to hold it forever and ever and ever. It's not that I don't hold any of my options. I can, but I don't think everything goes to the dream target. And when the conditions are ripe, you might want to hold something to a much, much bigger target or dream target. What do I mean by that? You got the market with you, or there's a reason for it. Say there's crazy news out or something like that. Or again, you've got the sector with you, or it's going really fast or something like that. On any given day, your goal should be what? To make money. So I call it you're chunking it out. You chunk it, chunk it, chunk it. That's how you put a week together. And that's how you put a month together, and it's day by day. Just take it day by day. I have no idea what I'm going to do tomorrow. I don't know what I'm going to do Wednesday. I don't know what I'm going to do Thursday, but I know when I get up in the morning. When I get up in the morning and I look for the gap, like we looked at the Disney gap here, you look for it, and then you scan and try to find everything you can, rate everything, tally them up, total them, and try to figure out which one is the best one to do. And for me personally, I try to stay with one a day. Any questions here so far? I saw some people come in late. Anyways, my whole point is for trading to do well and to be successful, you need a foundation. And this is something that so many people lack. I talk to people on the phone that are interested in my class, and they come, they say, what do you do? And then they tell me what they do and why they take certain trades. They say, well, I just went long today or shorted so-and-so today. And I said, well, what's the strategy? And then they say, blah, blah, blah. But they're really telling me something that's an entry. I'm like, that's an entry. That's not the strategy. You need a foundation. The foundation is why you're taking the trade in the first place. You need an infrastructure for every entry, and it is the strategy itself. And if you just have an entry, that's why it's not working more than it's losing if you're losing money trading, because you don't have a strategy that backs up the foundation of the entry that you're taking in the first place. The strategy is a core reason behind why you're even watching that stock in the first place or even contemplating an entry in it. You've got to have that foundation. The foundation, again, is the strategy. And an entry in a stock should not be taken unless the trade has this foundation, which is supporting it, okay, that says this is a good place to go long or short because XYZ is happening. And again, for me, it's the gap. So it's very, very important that many stocks on any given day have no strategy to trade as a day trade. Today's a good example of that. Because if you went long in the morning with the market, you might have made money if you got out quick. And if you didn't, you lost. And if you shorted, you could have shorted and not knowing that the market was going to fall, but it would have been a late trade. And would you have gotten out before we bounced? Who knows? Okay. Again, you have to have that foundation of the strategy itself. And this is why on most given days, stocks don't have a proper entry because there's really no strategy happening. So we didn't do any day trades today. We didn't do any day trades at all. Nothing met my criteria. either long or short, and we did nothing. So again, the whole point is to try to find something good to do, because if you can make money. Otherwise, again, it's a 50-50 crapshoot, because gaps are a strategy that help you set the tone for why you want to do it in the first place. Why are you doing that entry that you described to me or have on your chart, or all the moving averages you have, or whatever indicators you're using? Why are you taking it? If you're telling me that this indicator is doing this and this and this, that's not a strategy. Indicators aren't a strategy. They're helping you maybe take an entry, but they're not a strategy. Gaps are a strategy, or a foundation for your trades in the market. And when you choose to take a trade, there has to be a support system behind why you're taking the trade in the first place. Gaps are the support system or reason why you would enter a position. And the reason you're choosing to enter a stock, or the foundation for your entry, should be because a stock is a quality gap. And that is the whole purpose of why I came up with this in the first place. Okay? Any questions here so far? Anyways, getting back to what I was saying, share size helps you make more, not holding forever and ever and ever to a piggy target. I think a lot of people, when they're losing and then they get a trade and the trade is up, they want to hold it to a piggy target because they did 5 trades before that lost. But if you have 100 shares, 200 shares, or a couple hundred shares, you know, book what you can. You know, $200 a day is $200 a day. It's better than losing. It's $1,000 a week. If you're risking $200 a trade and you're making $200, that's still 100%. Don't try to hold it to make 200-300%. Okay. Anyways, getting back to what I was saying though, every time you look at what you're doing, you're trying to size yourself equal on most of your trades as close as you can. It's not an exact science, but your share size has to be with your real cash. And again, we're doing stocks that are range in price. Could be $5, could be $100 in the day trade room. And yes, we will do options that are sometimes expensive, like NVIDIA. There are some people that cannot trade NVIDIA. Why? They're not risking over $2,000 per trade. And if you're not risking that in every trade, you can't do NVIDIA. Because you could lose in one NVIDIA trade that might cost you $3,000 for one contract. And if you're risking $1,000 on every options trade normally, then you'd have to take 3 100% winners, risking $1,000 per trade, and you'd be break even. You would still be not even up. So the risk amount per trade has to be close to equal. You could say, I'm going to risk this much in my day trades, fine. I'm going to risk this much in my options, fine. That's different. That's what I do. It's about the fact that per trade, whether it's option or day trade, has to be the sense. And again, in your mind, if you can just wrap your head around the share quantity, you can kind of get an idea if you're looking to get the dollar move. Again, in a margin account, you have to have the margin available to take it. So again, if you go prop, you can open up a prop account with $5,000 on 10-to-1 margin, you have 50,000 buying power. If you open up a retail account, you have 4-to-1 buying power, you need 25,000 to trade on margin. You'd have 100,000 buying power, then you need 25,000 cash at a retail broker. What does this mean? Does this mean you're risking $100,000 when you take a trade? No, it means you're risking the amount that you have, put the stop in. For example, if I say 10 by 60, that could be 50 cents or $1.50. You have to know if we're doing Disney or some other stock. But again, in that example, if it stops you out, if your risk is $1,000 a trade, that's all you're going to lose. You're not losing the cost of the position on margin. You're losing what you risk, which is the difference between the entry and the stop. Jim is asking a question. Do you use stop losses in your options trades? No, I don't need to. The stop is what I'm risking. That's it. You could say, well, I'm going to kill it when it's down 50%. Okay, fine. You're going to lose in a trade that I make money in, though, if it goes on to work. Now, if the trade goes bust and I never make money in it, then you would save the 50% in something that I lost in whole. That's true. If I call a trade on Monday and it never goes right and it expires Friday. But in my opinion of doing this for as long as I've been trading, you will have the best results if you set your risk down, let the trades play out, and play every trade to win and lose. So if you're not tight with your options trades, with your if you're not tight with your money management, you will have better results trading options. And one of the reasons that people are all over the place with options is because they are too tight. Again, they wanted to go right ways, and mainly people do with options because of time expiration. They get so crazy about time expiration that they totally aren't even paying attention to why I called the trade in the first place. So it's like, again, if I called an option, I'm just going to go back to Disney here really quick, this chart quickly. If I call a Disney put because I like it, yeah, again, I'd love every trade to go the day that I called them, and sometimes they do. But if it doesn't, there's a reason I called that trade. The foundation, the gap rated well to tell me that it's going to sell off if we're short, which we were short this, it's a put. And again, if you kill it, you're worried about the P&L instead of focusing on what's happening with the chart. And again, this is where so many people just don't know what's going on. And if you don't know what's going on, you're going to focus too much on the P&L. And this is just, it doesn't even matter if it's a day trade or an option. It's the same concept. It's the same philosophy. So my stop is my risk. That's it. And it should be yours too if you come and join and trade with us, Jim. Any other questions? I mean, you could survey 1,000 people that have traded with me in the last, 8 years doing options, 10 years, whatever. They'll all tell you the same thing. Shoulda, woulda, coulda, when they got out of trades and killed trades that went on to work that I didn't kill, that they were down in. So it's all about using one strategy for me. One strategy is all you need to be successful in the market. You don't need to have a broad-based, knowledge of lots and lots of things. And people want to study and they want to do Forex and they want to do Bitcoin and they want to do futures. How are you ever going to get good? There's not enough time in the day. You got to sleep. I mean, that's important too. You got to spend some time to yourself or with your family. And you got to work your regular job. Or if you're retired, maybe you have something else to do. But the fact is, there's only so much time in a day. You're not going to become an expert if you're doing too many different strategies. So I learned that very early on. I also learned very early on that I only need to do one trade a day to make money. So that's one of the reasons why it wasn't hard. It's not like I talked myself into only doing gaps. I knew that I only needed one trade a day. So I knew that it was just finding the right pick. And again, the reason that I prefer to short is because of the fact that I get big moves faster to the downside. So that I prefer to short. But we will go long. We went long, that Google. Anyways, one strategy is all you need to be successful in the market. You do not need a general, overall, broad-based view to make money. Tons of people have that and fail all the time, which is problematic. So learn how to read institutional money and price patterns and gaps, and you don't need to do anything else. Because if your reason for doing this is to make money, this will make you money. So you have one goal. It is to make money. And again, it's something that escapes many people. They take a trade, the trade is up, and then they say, I'm up. They're happy that they're up. And then all of a sudden they go from wanting to make money when they were losing to all of a sudden wanting a piggy target. It's like, wait a minute, that's ass backwards. If you've been losing, you're in a trade and you're up 95%, get out. It's a good trade. If you're up 55%, get out, book it. Take it, book it, take it, book it, take it, book it, take it, book it. Again, people get obsessed with trades when they're down. They should be focusing on the trades that are up. What do I do with this? Should I get out of this? Where's the market? Where's the target? The typical duration of my options trades is 1 week. I don't call trades out usually for more than a week and a half. So we're doing the short-term weeklies. If you're asking me, on average, do I hold for a day or 5 days? I can't answer that question. I have no idea. I have no idea. I've never cared or even looked at those stats. And it's probably a 50-50 anyways. Probably 50% of the trades I'm out in 24 to 48 hours, and the rest of them I'm probably waiting till they go. We did a trade the other week. It was HD. It didn't go. It was completely down. The whole trade was worthless until it went. And it was probably the best trade of the week because it was completely down and then it went. I mean, again, like if that trade doesn't make you a believer, if you're trading with me, nothing ever will, because I absolutely know 100% there were people that probably killed that trade, took a loss in a trade that went on to work, and even I got out of that, which I thought was a good trade. I got out of it and I made money and I could have held it longer. But again, that's not, your goal is not to hold everything to a piggy target. Also the day trades, do I trade to a target? I guess I'm looking for targets in my day trades, but I'm also looking to get out fast. So like if I'm in a day trade, if I'm up money and it's not at the target, I might get out anyways. So if say I take a trade and it has a good entry and I'm up, I risk $3,000, I'm up $3,000, I might get out even if it's not at the target. I don't use a trailing stop, but that's not a rule. That's a personal preference. What was I going to say? Anyways, I'm looking for that morning time frame. Now, what if I'm in an option? Again, if I'm in an option, I check them as the day goes on. If I'm doing emails, whatever. If you can't, you got to put a sell order. But my day trades, like, I'm really not even trading an hour. The room isn't even open an hour. I think today we were open because I ended up doing a lecture and I was talking and we didn't do any trades. But if I trade tomorrow and we take a trade and we make money and we're done by 9:45, I'll close the room. So some days the room's open for 15 minutes. We just do what we got to do and we're done and out. It's like going to the gym. If it's like, okay, I'm going to do my spin class. It's 45 minutes. I'm in, I'm out. I'm not lollygagging around after spin class. So again, if your job is to make money, you get into the trade, get in, get out. Boom, done. You hit it, you're done. Same thing just like you go exercise or you're at the gym. We're not lollygagging around here. We have better things to do than sit and stare at a screen all day, Good questions here. Any other questions? Kathy, I see you here. I hope you come back, Kathy. I know you've been away for a while. Bob, I know you're looking to get back into it. So let's talk about the benefits. The benefits are countless. I mean, I could go on and on about the benefits of trading. Somebody said to me the other day, you have so much free time in your hands in the afternoon, you could do something else. And I'm like, why? I like the fact that I have time on my hands in the afternoons. Like if I don't have a webinar or a class, I pretty much have the afternoon to myself. I can go walk in the park. I could actually do other things with my life. So, you can get hobbies, you can read. It's, this idea of working like till feel like we want to fall over and drop dead, like that's not helping anybody. Again, longevity and staying young and keeping our stress level low is so important and so critical in a challenging world. And if someone said to you that you could earn a living working an hour a day or less, again, why wouldn't you say, this sounds fabulous? Now, again, you have to learn it. You have to pay for my class to learn it. What's your learning curve going to be? I don't know. I don't know you at all, but you know you. Maybe you do have a learning curve. Maybe it's hard for you to get concepts. You got to do it, go back, ask questions. That's fine. I'm here. I allow people to call me. I allow people to email me. The best place to ask questions is coming into the room every day. Again, you take breaks and vacations when you want, and your income is determined by your experience and then your risk amount, which is, again, the size of cash that you have. So that's really how much cash you have that you can risk. And no one should be risking their whole account every day either. Bob's question, how long a time is necessary to properly make a 26-point rating on each stock? First of all, I get up extremely early. So, I'm an early morning person, which is why this trading is great for me, especially trading the morning. But I still don't rush it. I could rate a gap on the fly in a minute or less, but I don't do that. Again, this is all in my head. But it's like, I take my time. She said, well, how the hell can you ever get anything done? You'd have to get up at 4 a.m. No, because the fact is, again, until you learn it, you don't understand. If there's 3,000 things that are gapping, you're not going to rate 3,000 things. I don't know what the percentages are, but I know that there's more things you don't want to trade, even that are gapping, than you do, if that makes sense. So you're scanning and you're making a small watch list. Now, in earnings season, we have more gaps. It's not earnings season right now. It's like the end of earnings season. There's a couple of earnings this week. There's a couple next week. But pretty much the next earnings season, it starts after July 4th. In earnings season, at the height, when it begins, we have, you could have 100 earnings a day. You're still not going to rate 100 things. And in the slow times, you might have 5 earnings, 6. Again, you're still probably not going to rate all 6. You're probably not even going to be good enough to rate. So again, once you learn the system, you very, very easily, you're scanning. And you're like, no, and you know right away. You're not even going to bother. So again, if you want to take your time, which I like to do, so I make sure I don't miss anything. I usually spend, 5 minutes, I'd say 5 to 7 minutes on every gap. If you're new, could take you 10 to 15 minutes a gap. Could take you even longer. So again, but you're not timing that by 100 things because you're making a little watch list. And even in the busy times, I don't even know what the most I'd ever rate in a day. I'd say if I rate 10 things, that's a lot. That's like a lot for me to rate. And that would probably be at the height of earnings season. And again, you should be able to do that easily within an hour. It's not like you shouldn't be rolling out of bed at 9 a.m. to log into the room. So you should be getting organized. You got to get up and make sure you're awake. You got to have a cup of coffee or green tea or something. You got to eat breakfast or lunch wherever you are. You have to get your head on straight. So doing this prep and the ratings and not rushing it helps you get your head on straight. Do you know how many traders, again, when I started out, I was in a trading room with 1,000 people. Do you know how many people just rolled out of bed, rolled into the room, opened their platform, 9:25, there would be a person calling trades in the room, and people would just aimlessly, mindlessly take the trades that the moderator called. They didn't have a clue. They didn't, no prep work at all. They didn't do any. How do you expect yourself to have good results? If you're going to do the trade, you should know what the hell you're doing it for, and you should also believe in the trade. If I say, again, Disney's lower, I get up in the morning and then I rate it, and you're like, well, she says Disney's lower, she's right a lot, let me do it. That's not the same thing as you just spent 8:30 to 8:45 going through the Disney chart, looking at the targets, going through the points, rating it, and you spent 15 minutes convincing yourself, oh my God, I love this thing. I have 100% conviction. You say, I can't wait to log in to see if Melissa likes Disney too. And then you log in at 9, and I like Disney, and I sent the put out, and you got the trade. You said, oh my God, there, she liked it, I liked it, I know what I'm doing. And again, that's what everybody should be doing. That's the whole point of learning it. What software do you use to find the stocks that are gapping? You don't have to use any specific software. I don't pay for any software at all. Finding gaps is extremely easy. There's a million free sites you can find them. A billion. So I wouldn't pay for any scanner. When I first started trading, I paid $100 for a scanner, and then I canceled it. It was just a waste. Finding gaps is easy. Qualifying them and rating is what takes the knowledge to learn how to pick them. Because you can't short every stock that gaps down, and you can't go long every stock that gaps up. And again, you can't short every stock that gaps up as a gap fill, which people think you can when you can't, and you can't go long every gap down as a gap fill, which people think you can, and again, you can't. If it was that easy to trade, always, always, always to the downside or always to the upside, whether it's a gap fill or the reverse, then no one would ever lose money. I could just say short everything that gaps down, but you can't. Or I could say go long everything that gaps down for gap fill, but you can't. And again, vice versa is true. I don't know why this is, but so many people just want to be very black and white with their trading. My system is 26 points. That's a lot. It's not black or white where you could just say, oh, there it is, it's one thing, let's do it. That's the whole point of taking the 5 to 10 minutes of doing the process and going through it. You're taking this thing and 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 this thing, and as you're going through the things, and you're saying, yeah, I like it, yeah, or maybe you're saying you don't like it. You say, oh, that's a no, that's a no, oh, that's a no, oh, I can really see this is a piece of crap, and I'm not going to do this today. And then by the time you total it, you're like, oh my God, it only rates 12 points. It's a piece of crap. Thank God I didn't do it. So again, you're either talking yourself into it, the rating system is talking you into it, the rating system is talking you out of it. So you're going through that process, which is the key to really doing it, and actually you are, again, the one that is in charge. You're learning the system in the class to do it yourself. You're talking yourself into it or you're talking yourself out of it, versus just taking a blind trade from someone where you can be happy with the person if they call a trade or mad at the person if they don't. You should be doing it yourself and going through the process and figuring it out. learning, there's just so much knowledge to learning about what to do and understanding what to do. It's the same in any industry. Like I could go on and on and on and on about so many different industries where understanding what to do is really going to help you succeed. But I mean, again, that's common sense to me. Whereas for some reason with trading, many people think they can just trade and not know what to do and make money. I don't know why. I mean, no one would say, here, operate on someone. There, go into the operating room, perform, open heart surgery. You'd be like, oh my God, I have no idea how to do that. I have to learn, I have to go to school, I have to go through a process. It would, I don't know why people think with trading you don't have to know what to do to make money. That's just completely insane. But for some reason people think it's that way. I don't know. Good questions here. Anyways, the benefits of trading are what? Again, work from home, unlimited income. So you have to want it, and this is kind of what we were talking about. There's so many people wanting to do this, but they just don't really want to really take the necessary steps to do it. Everybody wants everything right away or yesterday. And if you're willing to put the time and work and energy and money into doing it, you absolutely can get there, and I can help you. I've been helping people for a number of years. Some people get it right away, like that, right after the class. Some people, it's a process. Again, it's the idea of going slow with yourself so that you will stick with it, and then I help you. Okay? So what is the whole system? The system is called the Golden Gap Rating System. It measures gaps by rating them in the daily chart to find stocks to trade that have a high probability of directional bias for the entire day, a big move on the day, early confirmation of the bias in the move between 9:30 and 10, and then precise entries with follow-through and a good risk-to-reward target potential, which is what I'm trying to find, if I can find it every day. But again, getting that momentum, the key is getting the right pick, because if you get a big move, it doesn't matter if you're 1,000 shares, 2,000 shares, you're going to have a good risk-to-reward. What I find with people to get the results, to produce the results, is they lack the consistency when they're doing things that don't work. I'm very consistent. You see that from the results. I'm also very consistent with trading to the downside. I'm consistent that I like to short consistently more than I like to go long. And I focus on gaps. I'm consistent with that. I'm very consistent. I'm consistently trading on the 1-minute chart. I'm consistent that I rate everything I do. I'm consistent that I look at the daily. So again, I'm somebody that's very structured. I'm structured in my own life. If you opened up one of my bathroom cabinets, you'd be like, this person is like super organized. Like people, I give them a tour of I'm in a new apartment, I give them a tour of my closets, they're like, oh my God, this closet's like insane, the way I have it organized. Like that's my personality, but it's really, really works for trading. So if you're not an organized person with trading, you got to try to force yourself to do it, because you're going to trade better and make more money if you're more organized with your thoughts, with your trading and your process. And even if you don't have an organized closet or a medicine cabinet or whatever, you really almost need to be like that with your trading, because otherwise you're like, woo, woo, woo. And you're seeing that with a lot of these Reddit stocks, and it's easy to get sucked into stuff and then be all over the place. You have to be organized. It helps you be consistent. You have to be consistent. You must be consistent. And then if you take a loss, if I take a loss in something, I'm like, well, it didn't work. The next 10 ones will. And I know that. Or the next one will be, 300% or something like that, Anyways, my class is called the Golden Gap. The system is called the Golden Gap. The Golden Gap system is a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist, and this is what you learn in the class. This checklist tells you what to trade when and in what direction. And again, that's the whole point. The 26-point checklist predicts directional bias in a stock. So some people want to do options. I have an options newsletter. You don't have to do the class for this, but I think it helps, okay? Reading the correct direction helps me see the institutional move to do the options trades, which I'm just trading based on momentum. But for the day trades, this critical time is in the morning between 9:30 and 10. Again, we do it. You can be from home, but the whole point of learning the system and learning the checklist helps you trade better. It helps you be more consistent. The checklist is just like I said, when you're going through and you have a job and you're going through and you have to take it seriously, and this helps you not trade like a gambler. Also, you've got to keep your risk consistent, and that is really critical, especially when you're doing things like that cost 40 cents, like a Disney put, or something like NVIDIA that may cost $2,500 for one contract. Anyways, I follow the process. This is how I stay consistent myself. I teach a class once a month. It's called the Golden Gap course. So this is a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is online. You can be anywhere in the world and take it. So the class for June is this weekend, June 8th and 9th, 9 a.m. to 5 p.m. Eastern time. I do have people signed up. So if you want to get in before the class fills up, email me and I will send you the forms. The class tuition is $69.99. Everyone pays the same. The class is online. And the combo class tuition includes the trends class, which is next Tuesday. That is $79.99. I'm doing a summer special, which is a great deal. You get the trading room free through the end of the year, the options newsletter free through the end of the year for the class tuition, which is the Golden Gap for $69.99, or if you do the combo. This ends Friday. But if you want to trade, I wouldn't wait to sign up till Friday. You can start trading with us tomorrow and make sure you get in the class. Any questions from anyone about anything? Good questions here. Bob, I hope you do the class this year. Kathy, I hope you come back. Jim, I don't know if you're ready to do the class this week, but I know you want to. James, I'm going to send you the link to get back on the subscription. Frank, I know you've been following me a while. Andrew, how are you doing? Did you do the Microsoft today? And HH, you're another one that's been following me for a while. And Terry, you've been following me for a while. I don't know if you're going to do the class this year either. It's kind of crazy how long that I've been doing this now. Some of you follow me for a long time. Any questions from anybody? So it should be an interesting week. We'll see where NVIDIA goes the rest of the week. We'll see where the market goes the rest of the week. We have the unemployment number Friday. We have the Fed minutes next week. You definitely want to. You're not ready yet. I know that you want to. I don't know what you're waiting for. When you know you want to do something, the best thing you could do is just jump into it. I'm not sure what you're waiting for, Jim. A sign from God or something, I don't know. But I can tell when people want to do it. And I don't know why they hold themselves back. Every once in a while, something happens and we get some monster options trade. And it's like, then I send it out in the marketing and people are like, oh my God, I should have joined. And then they missed it like by a day. I mean, that happens like, I can't even tell you how many times that happens. Like that was like a lot of those at the beginning of the year where like there were some people that signed up like in December and then got the BA puts we did earlier in the year. And then if they weren't on the letter by January 1st, they didn't get them. Because you just don't know. You don't know when the next big one's going to be. But if you know you want to do it, I don't know what you're waiting for. Kathy, are you there? Kathy, I don't know if you're trading. I don't know if you know how to chat either. You can email me, Kathy. Oh, there you are. Are you trading, Kathy? I know some of you were trading and you're trying to figure it out. And just come back. So we'll see what we get tomorrow. Again, we have some earnings this week. You're thinking about it? Good. Did you watch me on Fox on Monday? I know you watch Fox, Kathy. In fact, I think that's how you found me. Is that how you found me on Fox? Somebody asked me to be on TV today, and I couldn't pull it together to do my hair and makeup in time. I had 20 minutes. There was no way I could be ready about the circuit breakers today that happened with the GME and the Berkshire Hathaway. I couldn't get ready in time to be on. I had to say no. Listen, have a great night, everyone. Email me if you have any questions. Again, here is my email, although I think you all know it. It's melissa@thestockswoosh.com. Some of you I will see tomorrow, and some of you email me if you want to join. You're welcome.